Thank you. Good morning, everyone. Welcome to the AGM 2024 of Tecnotreen. It's nice to see that we have more audience this time, and I'm also welcoming the virtual audience who have joined us today to our AGM. I have a small update for you and followed by a Q&A. Basically, I want to start. A lot of this has been covered in our quarterly presentations that we've given in our Investor Connect, but it would be good to have a refresher of how we performed on a very difficult but challenging year, 2024. Tecnotreen, I'm glad to say, met the guidances that we had promised to deliver in 2024. The highlight definitely being 3 quarters of consecutive free cash flow after a period of 7 quarters of negative free cash flow. So we turned the company around. A predominant effect of turning that around and making positive free cash flow was in Q2 when we announced cost reductions of about 4.5 million across the company in various facets of the company. And we were able to achieve 6.9 million in cost reductions, which definitely helped both the EBIT as well as the free cash flow. In addition to that, our stack has continued to become extremely stable. It has got 4,000 features and is being recognized globally, not only in emerging markets, but also in mature markets. And a validation of that was our acquisition of our first Tier 1 telco in the United States, which has never been so in the 46 years of history of Tecnotreen, and was a landmark win for Tecnotreen in 2024, proving that all the capital investments that we had made in the company was in the right direction. Getting into the details, as we had promised in the second half of 2024 to deliver greater than 1 million of free cash flow. In 2024, we delivered 1.8 million of free cash flow. And then the revenue in constant currency was slightly muted, a 4% growth. Compared to 2023, which was at, it was at 81.4 million for 2024, whereas 78.4 million for 2023. What is noteworthy here about the revenue is the fact that we had stopped one of a significant Tier 1 telco operations in the Middle East, which was fetching us anywhere between 6 to 10 million revenue year on year, was completely stopped in 2024. And despite that, and a market that was slower in growth, Tecnotreen was able to deliver in constant currency terms a 4% growth, which is definitely noteworthy. But in real revenue terms, the actual revenue was 71.6 million, mainly due to currency fluctuations and the depreciation of the naira and the inflationary pressures of Argentina. In EBIT, the company did well, 9% growth to 26 million. But in that is in constant currency terms, whereas in real terms, the EBIT remained the same. Despite a lower revenue growth, we were able to maintain the same EBIT, mainly because of the significant cost reductions the company sort of forecasted and acted upon earlier on in 2024. The company had promised in the beginning of 2024 to move to an annual recurring revenue model in order to bring stability both in terms of collecting cash as well as investing and creating a lesser churn of existing customers. And I'm proud to say that we were able to increase the ARR revenue by 10%. And I believe in the upcoming years, as we complete deliveries, it's a cyclical event. More and more of our existing customers will move to the annual recurring model when they choose maintenance contracts and operational support contracts, which is called DevOps with us. So this revenue should continue to increase, and it will improve the predictability of cash collection and also the realization of revenue. Although revenues will come in smaller amounts, it will come in consistent amounts going forward. The capex to sales was also reduced as part of the cost reduction program, and also because we have heavily invested over the last 3 years in our stack, have 4,000 out-of-the-box features today. It's being recognized as one of the best standards compliant stack in the world, and hence we were able to bring down the capex to sales by 7% to 13 million in 2024. In addition to that, the DSO days, however, had expanded from 153 as an average in 2023 to 176. This is mainly because a lot of deliveries happened in 2024. And the way the deliveries work is you complete the delivery, get the acceptance from the customer, and then we invoice the customer, and the payment days are anywhere between 60 to 120 days in some instances. So since a lot of deliveries got done in Q3, Q4 of 2024, there are more collections that we have to do in terms of AR. But if you look between 23 and 24, there is more than 39% to be exact, of the collections are less than 30 days overdue, which means we have invoiced a lot more and we are waiting to collect them in 2025. The order intake has remained stable despite a slower growth in the market overall. The most important part of this slide is in the bottom, the deliveries. It is unimaginable, in fact, in our industry and amongst our competitors to look at the way the stack has been delivered. We are roughly doing 10 parallel digital transformations in every half year. We actually completed 20 transformations across various telcos globally. And this is not just in one location. It's in the Middle East, it's in Africa, it's in Latin America, it's in Asia Pacific, and now also in the United States, and definitely a few in Europe. So definitely the company has got a good product out of the box, which is highly standards compliant, and therefore our ability to quickly transform the business of our customers, increase their subscriber revenue, has been proven by the stability and our ability to do deliveries parallelly across the board. In addition to that, the company has been continuously expanding its customer footprint and its partnership footprint. What is noteworthy in 2024 is definitely we acquired a lot of new customers in the Middle East, in the United States, in Latin America, many MVNOs, which are sub-brands of a tier one carrier, have also been part of our new customer base, and we have an ever-growing, ever-expanding footprint of new customers coming on board. What is really important is the partnerships we have created. The SI partnerships help us scale our products into mature markets, and it's a deliberate strategy which is very cost-effective, but gives us the business and revenue growth that we are looking for in these markets. So we have expanded our footprint through these SI partnerships and the hyperscalers like Google, Amazon, etc., which help us also expand the cloud delivery, especially in the modern era where hybrid cloud type of requirements are very common among communication service providers, mainly because of the growth in AI business and the need to process large amounts of data. Our partnerships with Microsoft Azure and Google Cloud is noteworthy. We also launched for MTN in South Africa a center of excellence operations fully on Microsoft Azure Cloud, of implementation first of its kind, won and delivered within the same year, was also very noteworthy to consider in 2024. And I believe more of such implementations will come up in future. The other important aspect is that we expanded our relationships with several analysts around the world. Today, our brand is extremely well known. I would say it's among the top 10 brands in the world for BSS, for telecom industry. The recognition by Gartner continuously, both for our revenue monetization as well as our customer relationships, have helped us. The TM Forum standards and the ODA compliance particularly is of significant interest. We were one of the early adopters of ODA standards and TM Forum standards, mainly because we wanted our stack to be SI deployable so that systems integrators can buy the licenses and scale our products to various customers and increase the presence of Tecnotreen products. And towards that, I think we won several awards. The Catalyst Award, we got nominated in the Excellence Award with TM Forum. I think this is a very important event because we were one of the early investors in TM Forum standards. And to prove my point, last year, in fact, at the beginning of this year, we did a study of 200 leading telco operators around the world, along with an analyst firm. And what we found out was the markets where there is digital transformation growth. Why is there a digital transformation growth? Because many tier one telcos want to rip and replace their existing legacy products and get digitally ready in order to serve their customers in today's environment and go beyond just communication services and provide other types of digital services given the data that they carry. And if you look at the number of opportunities globally, North America, Europe, Asia-Pac, and other Middle East markets are the growth markets, and Tecnotreen definitely is in all these growth markets. And when you ask these customers, what is the one thing that they would want in the digital stack? They want TM Forum compliance. 88% of all the buyers of new software for digital transformation want it to be standard so that their ability to quickly implement and integrate the product and offer new services to their customers can be done quite significantly faster. So 88% of tier one operators who send out RFPs demand TM Forum compliance. The other statistics is when they look for TM Forum compliance, they typically look for products and services areas of the stack to be TM Forum compliant, and that's exactly where we play. We play in customer relationships and revenue management, and that's where our TM Forum compliance is, which is in line to what the customers are looking for. They're also looking to do the transformation in 2 to 3 years maximum, if not 4 to 5 years. They cannot afford a much longer gestation for the transformation. And finally, without reading a lot of the data below, what is really important to note is only 11% of our competitors, including Tecnotreen, have a stack that is TM Forum compliant. All the other vendors, including the big vendors like Netcracker, Amdocs, CSG, claim compliance of about 50%. The rest of it is legacy information, legacy stacks, and legacy products. So customers want full TM Forum compliance, and Tecnotreen is in that 11% category of being fully TM Forum compliant, and therefore we bring to the table a moat of capability that will hopefully help our revenue grow. So if you look at the projections and guidance that we have given for 2025, there are two important areas that we need to focus on. One is revenue growth, and the other is free cash flow. The next set of slides that I'm going to talk about is in a year where it's going to be quite challenging in terms of revenue growth. The markets are fairly volatile. Every day there's a new drama from North America about tariffs, no tariffs, etc. What would be the most significant thing that Tecnotreen can do to grow its revenue? And I think we understood this before the Trump tariffs came to play, as we are a Finnish company that is global and local at the same time. The new operative word for success in our industry, in the technology space that we are in, is to be local, I would call it. Not just global, not just local, but be global. And what global means is that we have global capabilities and expertise in different parts of the world, like in Finland, like in India, like in Latin America and Middle East. But we are extremely local and close to the customers in terms of how we deliver our software, how we modify the software to the needs and requirements and the regulatory requirements of our customers. We hire local people in the local markets and expand our footprint that way. And by doing so, we get a lot more advantage in terms of meeting the customer requirements. So if you look at this slide, there are 4 strategies that we are going to work on this year in terms of improving the revenue. Strategy number one is with our existing clients, where we have already done the transformation, where we have helped them retain their existing subscriber base and grow extra subscribers. We are now going to help them monetize those subscribers, help them get more revenue from those subscribers by offering new types of digital services on their platform, whether it is through the Diva wallet or through our B2B2X ecosystem play. We are going to help them make more money with their enterprise customers. With our OEM partnerships that we have with Microsoft, IBM, and Google, etc., we are going to improve our ability to offer our product stack on cloud and readily deploy and readily monitor using cloud capability and cloud tools. In terms of SI partners, they are going to help us scale all along the white space of mature markets, whether it's in North America or in Europe. I think using the SI partners, whether it's HCL or Accenture or Cognizant, Deloitte, these are all the various partners whom we are either now training or already engaged in terms of searching for new opportunities in the mature markets. And finally, I think the recognition we are getting by Gartner, by industry analysts like IDC and Oda from TM Forum helps position our product as a very superior product in the market. As I've already said, we are among the very, very elite group in terms of having standards compliance. And today, Gartner even recognizes in the Magic Quadrant for AI and AI capability being embedded in the stack. And that AI capability is going to be an integral part of how telecom operators are going to use their real-time network data and help promote more revenue growth to their subscriber base. So these are the 4 pillars of growth strategy that we are going to follow in order to ensure that we meet the revenue guidance that we have given you. Finally, I think we are a software company. We have been known in the Nordics the last 2 years in a row as one among in the mid-cap section as one among the most advanced in terms of diversity ratio. We take ESG requirements and compliance extremely seriously. We have a green data center approach in one of our data centers in Bangalore, 100% zero carbon footprint. In fact, even the offices that we use are compliant in terms of ESG standards. But in 2025, we will do more. We will definitely increase our diversity ratios around the world. We will ensure that we are 100% green data center compliant by 2030, especially with AI. As you know, the requirements for compliance is extremely important, mainly because of the carbon footprint it creates. And we will try and maintain the existing score of employee satisfaction, both in terms of training, building competency, having gender diversity, having a healthy workplace for them to work, etc. We are also continuously looking at the EcoVadis requirements, and we will continue to assess ourselves and ensure we are compliant, especially required for the business that we will be doing in Europe. And finally, the ESG-linked KPIs for leadership are also in the goals of all the leaders of the company. So there are equal importance being given for ESG compliance. Finally, I spoke about revenue. I spoke about our strategy of how we will grow revenue and why we believe we have a very competitive value proposition on revenue. The other big focus this year, and is again part of the entire leadership, is to ensure the company has quarter-on-quarter and a free cash flow greater than 4 million. So how are we going to achieve it? We know that the DSO days are a cyclical event for the company. We acquire orders. It takes us anywhere between 6 to 18 months to deliver orders. And once the orders are delivered, then we invoice the clients and collect cash. We installed a whole awareness program called Think Cash, Do Cash last year to improve the cash collection capability. We have been very vigilant with our customers in terms of, if you do not pay us, we do not deliver. And that is a very significant statement coming from a provider who helps them monetize their subscriber base. In other words, if we do not help them bill their customers, they cannot collect revenue. And if they don't pay us, we don't help them bill their customers. So it's a significant step that we have taken in terms of building awareness for ensuring cash is collected on a timely basis. As we have seen, I already said that in the past periods for 7 quarters, the company continued to have negative cash flow. Last year was the first year we delivered 2.2 million overall in H2, and we have given a guidance of greater than 4 million cash flow, free cash flow for 2025, and all hands on the deck to ensure that that happens. I think the other big strategy that is going to be important to ensuring free cash flow is the way we manage the ARR revenue and the ARR growth. As you saw, we have completed more than 20 deliveries last year, and there is a great opportunity to mine from these customers more ARR revenue in terms of maintenance contracts, operational 7x24 operational contracts, as well as contracts to do enhancements, as we call them as DevOps. So with these contracts, the ARR revenue should grow. When the ARR revenue grows, the collection becomes more predictable. The revenue growth is also more predictable in smaller chunks. And the customer is able to manage that with a more significant OpEx budget rather than a CapEx budget. Finally, the guidance for 2025, just to refresh you, we have said low to mid-single-digit growth in revenue, which is higher than what the market has predicted, which is 0 to 2% growth in 2025. And many of our industry competitors have given negative growth for 2025. EBIT, we have said, will grow by 200 basis points, and we will deliver free cash flow greater than, I don't know why it goes, sorry, greater than 4 million as free cash flow for 2025. So the focus is 100% on growth in revenue and 100% growth to 100% ensuring that the company delivers positive free cash flow in 2025. Other than that, we will have a complete focus on collecting cash and managing the receivables between 100 to 140 days, because still we have very many tier 1 large telcos, multi-billion-dollar telcos in our books who can, have a payment term of 120 days if they so wish. So we need to continuously negotiate with them to lower the payment days. The capex to sales will remain as per industry standards. We obviously have a very mature stack right now with a lot of features out of the box. So we will keep the capex under control between 10 to 12%. The dividend payout policy was introduced last year. We will comply with that and hopefully stabilize the dividend payout policy. And we will continue to focus on mature markets to reduce our focus on frontier markets, the overall risk of the frontier markets. Today, I would say it's about 33% presence in frontier markets. But as the growth in mature markets with the help of SIs and other partnerships grows, that percentage in terms of revenue will come down. Finally, on the overall risks, I think I've touched upon all of these risks. The first one is delivery delays and slowdown in the BSS market. The growth projection is 2.1%. We have said mid-single-digit growth for ourselves ahead of the market. We've always stayed ahead of the market in terms of growth. And the way that we will mitigate it was the 4 pillars I talked about: mining existing accounts, working with SIs, working with hyperscalers like Google and Microsoft on cloud offerings, and finally also setting up relationships to sell over on top of the digital stack, other services that will not only grow the subscribers, but help our operators monetize more revenue from the existing subscribers. So we will have a growth strategy towards delivery delays and slowing down of the market. In terms of payment delays, I think it is really credit control policies that we have implemented. I've spoken to it already. We will be very, very firm on those credit control policies going forward. And in terms of inconsistent tax rules and double taxations, we have, for example, all of LATAM, we have converted them so that they pay in US dollars. We are very, very we have high levels of surveillance being a global company in terms of how we localize some of the services, how we follow the sun in terms of delivery, and have local presence in many markets. And it's probably going to increase even further as we expand our footprint in terms of serving our customers in the countries that they operate in. And as I said, the operative word for the next 5 years is going to be glocal rather than being global. And finally, the last point I want to make is on high exposure to volatile currencies. I think we have a mitigation strategy of moving away from frontier markets and countries with difficult currency exchanges. Definitely, we try to deal with them in euros and dollar denominations, but where that doesn't work, I think we will move towards more mature markets, where our stack today stands good and stable for us to deliver and collect revenues in dollars or in euro currency, which are far more stable. With that, I complete my presentation. I thank you for your patience to listen through this. There is the AGM reports that you can look at, and you can also ask questions if you like. Thank you.